Hello, welcome to another podcast of Master Investor. Glad to be here again. My name is Jose. I'm the founder of the company. Our community here's mission is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we're looking for opportunities to build passive income and true wealth. Today, we're going to be speaking about why diversifying among the different asset classes that exist is important to do successfully so that we hedge for inflation and protect ourselves from any bad economy. In fact, when we have financial education in us, we can cash flow positively on any type of economy. A master investor is that one investor that knows how to capitalize on each market. It doesn't matter how the market is doing, we are still cash flowing successfully by controlling the right and sound assets that will produce passive income and sometimes capital gains income. Before we ever invest in anything, as a master investor, we know exactly what type of income we are going to get, whether it's passive income or capital gains income, and we measure the return on investment on each investment with facts, which boils down to measuring with the cash flow of that business by reading the financial statements. So we want to go based on facts instead of opinions. People that gamble at investing, they're going based on opinions, meaning that they are being directed with events that have not happened and might never happen in the future. So focus on building your asset column with real assets from different asset classes. There are 5 asset classes that exist today. When people talk about diversification, they oftentimes speak about diversifying within one asset class, which that is not what we're talking about here. We want you to understand there are 5 different asset classes that exist, and those are real estate, business, crypto, paper assets, and commodities. Learn about each asset class, invest in the financial education necessary so that we take control over decisions that we are making based on the asset class that we want to focus on. And as we grow our positive cash flow from one asset class, we want to move that generated revenue into a new asset that will produce either passive income or capital gains income. Understand the new rules of money. We have an ebook on that, so I want to invite you right now, if you're new to our community, to go to our website. I'm going to put the link in the description. We have 2 ebooks right now that you must get if you want to learn how to build wealth successfully. The first ebook is called The 10 New Rules of Money. That one is going to give you the insight of why understanding the new rules of money will help you build wealth fast and successfully and maintain that wealth, right? A lot of people have a lot of money, but they don't have the financial education, so they cannot make their money work hard for them. That's why they keep going to a job to earn a check by exchanging or selling their time for money. And even though they may have money in the bank, they still don't know how to make the money work hard for them. So it's difficult for them to invest in assets that will produce passive income and capital gains income. If anything, what they do, they invest that money into fake assets, like we talk about 401ks, mutual funds. Why are those fake assets? Because if they're not producing any type of passive income or capital gains income right now that we can have access to, then it's not a real asset. An asset is something that puts passive income or capital gains income into our pocket whenever we're not working. Okay? And so here at Master Investor, we're giving you tools, resources, and the financial education that you need, that we all need in order to build our asset column with real assets that our companies control. And when we build a company, we have said that it's important to build intrinsic value in the company, which means that we're creating a brand. So if we're starting from scratch, we want to trademark the name of our company. We want to make sure that we think of the business being here 200 years, 300 years from now. We have to have a long-term vision of that brand and protect that niche by trademarking the brand. In addition to having a intrinsic value, when we are building a company or investing in any type of company, we want to note that, okay, this company has intrinsic value. They have a registered brand, it's protected, they have something unique that no one else has, that no other companies have right now at this moment. So they have a patent, they have intellectual property, etc. That's how you turn a company into a brand, and that's how you also tell whether a company is a brand. Because a lot of times we are going to invest in existing companies. So we want to make sure that those companies are a real brand that has intrinsic value. Furthermore, we want to also make sure that the company or the brand has financial integrity, and that comes from having the systems working successfully together, because a sound business is a system of systems. So the systems that are in that business, they have to be in harmony, fulfilling the mission of the company daily, and making sure that the business is profitable after all expenses are paid at the end of the month, at the end of the year. The business is bringing this much positive cash flow. It has a positive cash flow, and also having financial integrity or business integrity, we need to have a business that is expendable. Think of big businesses like Amazon, Netflix, Nike, Coca-Cola. These are true businesses that have intrinsic value and they have financial integrity. So make sure that when we're building our businesses, we are focusing on building a true brand that has intrinsic value and financial integrity. Because without those two main components, then the business will not have any type of longevity and is going to fail sooner than later. Once we successfully acquire an existing or we build a business that is profitable, then we need to begin to move that money. And even before we even get that money, we have to have a plan for that revenue, for that positive cash flow that is our money to reinvest into an asset that will produce more positive cash flow. And that's how we compound our asset column with real assets that are producing passive income and capital gains income successfully for us, and our wealth is growing, and also our expenses are growing. Our liabilities will grow too, because there are things that we want to experience, and it's okay. We speak about it here all the time. Being a master investor has nothing to do with saving money. People that save money, they're the opposite of a master investor. Master investor, number one, respects and does rule number one of an entrepreneur, of a wealthy entrepreneur, which is to raise capital. Okay? And the number one skill of a wealthy entrepreneur is to sell without selling, using systems and smart marketing. And the job number one of a master investor is to put money to work, whether it's our capital that is coming from our existing assets that we're controlling, or we have capital saved up and you're becoming a master investor because you're investing in your financial education, and now you have the knowledge to put that money to work into your asset column to produce more passive income, of course, and bring that money back and get us to infinite return on investment on whichever asset we invest on, because infinite return investment is what we're looking for, meaning that we are getting money for nothing. We have recouped the entire initial capital invested back, and we're still controlling the asset, plus it's producing positive cash flow into our pocket every single day or every single month. We're collecting passive income. okay? And we want to use as much debt as we can because debt is tax-free. So when we have capital and we're reinvesting it back into either the same asset class or a different asset class to hedge for inflation and protect ourselves from down economies, then we need to have a plan before we even touch that money. Okay, this is going over here. I already know the asset. I did the due diligence. Our company has looked at the entire operation. It came back with a green light. We're gonna go ahead and move this capital once we get it into that new asset because it's gonna produce this much every single month because it's showing based on the financial statements that that is what the asset is making today. So understanding how to plan for every single dollar that we have, that's the beginnings of building true wealth because we have to have a plan. Otherwise, the money just goes and you don't know where it went. We have to have control over cash flow. Anything that we touch with our hands regarding either debt, right, a credit card or personal loan or business loan, a credit line, whatever, we have to have a plan for that money. We have to treat debt like money because it is money. Money is created with debt. That's why debt is tax-free. That's what we encourage everyone here in our community to learn how to use debt to leverage ourselves to even more wealth and infinite return on investment, because if we have no capital invested into an asset and we still control the asset, plus we are collecting positive cash flow after all expenses are paid, then we are getting money for nothing. We're printing money legally, and now that asset becomes another leverage to build more wealth because we're going to direct that cash flow that is being printed to a new asset to produce more passive income into our income column so that we can have more expenses. And remember, when we have financial education, we can use our expense column to become wealthy because one of our expenses is going to be always invested. That's what we want to encourage everyone to do, to focus on the asset column, and then once we produce the passive income, redirect that into more assets. And now we're not only getting wealthy for free, but we're compounding the formula of velocity of cash flow, which has 5 steps. Number 1, acquire or build a cash flowing asset. Number 2, recoup the initial capital invested back. Number 3, keep control over the asset and the debt if we're using part of the entire finance through debt, which the bigger we go, the more debt we're going to be using. So keep control over the asset and the debt. And number 4, move the cash flow that is being generated from that asset into a new asset. Number 5, repeat the entire formula. And that's how we're going to get into the velocity of cash flow, which is key in order to have total freedom, have financial security, have no worries about ever paying any type of bills by the individual working, exchanging time for money. You're going to have total freedom and have the ability to thrive in the world and in your entire life with passive income instead of earned income. There are 3 types of income that exist. Earned income, which comes from a job, and then we have capital gains income, which comes from when we purchase an asset at a certain price and then we sell it for a higher price. That profit right there is a capital gain. So capital gains income comes from buying low, selling high. Then passive income is the third type of income that exists, which comes from assets that we are controlling and they are producing positive cash flow into our pockets whenever we're not working, right? We could be doing something else, whether it's brushing our teeth, going out with our family, whatever it is, going to a trip with friends, etc. Anything that you're going to be doing in your life, the assets that are producing passive income continue to pay you even though you're not making any moves within that asset. The asset is working because it has a system of systems implemented in the asset. Whether there's a company that you invested on that already existed, whether there's a real estate property that you acquire because the property has been making this much money for the past 20 years. Tax returns, financial statements tells us exactly what's going on behind that specific investment. So it's important that we know how to read our financial statements. We have a financial statement that we add in one of our courses, How to Build Cash Flow with the Internet. When you get that ebook, you'll also have access to that financial statement. The more assets we add into that digital e-course, then you're going to have access to those assets forever. So if you get it right now, you're paying a bargain, and it's going to be a lot more money in the near future because we are adding constantly more videos, more tools into that asset to help you either launch your first business, acquire a new asset. Maybe you're already successful in regards to business and investing. You're having success in your niche, and now you want to diversify into a new asset class. So this whole digital course that we have put together is going to become more valuable, and all of the courses that we do will always have more assets embedded in them as we grow our company and we continue to partner out with other successful business people that can share their experiences and knowledge so that we can help our community grow and basically bring the master investor out of us, because we all have an investor inside of us. It is up to us whether that investor stays an average investor, which means the person has a lack of financial education, or is an investor that has financial education and it becomes a master investor because he or she is receiving passive income and capital gains income, has the 3 E's of a wealthy entrepreneur and a master investor, which are financial education, experience, and excess of cash flow. We need to focus on our asset column. When we focus on building passive income using debt, we can minimize taxes all the way to zero legally because debt is tax-free and passive income is also tax-free. Capital gains income, we can also defer taxes using the laws when it comes to real estate and other assets that allows us to navigate legally through minimizing taxes. But the best type of income that we can focus on building, because it's tax-free, because the laws and the tax code is in favor of it, is passive income. Okay, so the more we focus on building passive income using debt, the bank's money, the better we're going to be able to minimize taxes all the way to zero, be a tax-free entity. When we study taxes, we understand that taxes are listed as the highest expense, is the highest expense that humans have in their entire lives. So understanding how to minimize taxes is really a way to become wealthier, because majority of people end up paying a lot of money in taxes their entire life because they're working for earned income, which comes from a job. Once you get a paycheck, you open up your paycheck, you're gonna see like a half of that check was already taken away through taxes, fake assets, right? Maybe you have a 401k and you're being obligated basically to put money into that because you want to, and so if you don't do it, the company doesn't put their share. And so a lot of people don't even have money to invest at the end of the month because they have a lot of liabilities and there's nothing wrong with having liabilities, but they have no assets on their asset column, real assets, and that's the problem. There's nothing wrong with having liabilities as long as you have an asset that takes care of the payment of that liability. So think big, grow your wealth, grow your mind first. You're going to have to think big, have the wealthy mindset, get educated. By listening to podcasts like this, it's going to also help you become wealthier, because I'm helping you through our podcast change the core values of money, help you have a different perspective about business and investing, and give you the tools and resources to help you build the asset column successfully. The one thing I want you to take on this podcast is that when we speak about diversification, understand that there are 5 asset classes that exist. I'm going to mention them again. Number 1 is real estate. Number 2, businesses, right? Any type of business that we want to acquire, that's an asset class. 3, crypto. Number 4, paper assets. And number 5, commodities. So which one is the one that we want to start with is the question. If you don't have any assets, get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, and also the 10 New Rules of Money. Both of them, you can find them on Amazon, but I suggest you just go to the link in the description of this podcast and get it from our website, because you'll have bonuses and assets that will come with each ebook that you will not get by getting it through Amazon. So you'll have a virtual office that you can always access from anywhere around the world, any device. You'll have a unique password that you will create, and you can access all the information from that digital course. And the ebook, you can also view it there, so you never have to, if you want to print it and get one physically, you can too, but you can always have access to that ebook through that virtual office that you will have access to. And you can download the ebook into any smart device, okay? And you can also view any other asset that we will be adding in the future into that digital course. So if you got it for a certain price today, we will never charge you more for that same course that we're going to be adding more assets. So everybody that, let's say in a month from now, is going to pay more money, you're always going to have access to all the data and any asset that we add into that digital course. So it's a good deal for the ones that are listening right now to go get those 2 digital courses. What are the 10 New Rules of Money and How to Build Cash Flow with the Internet? You're going to get tremendous value. It's priceless, really. And start filling in your financial statement. If you don't know where you are financially today, then you need to fill in this blank financial statement that we added into the digital course, How to Build Cash Flow with the Internet, Turn Passive Income On. You're going to see it as one of the attachments within the digital course. Once you enter your virtual office, you can download that into your Excel, or you can print it out and fill it in. And as you're filling it in, you're going to learn about your finances, about the cash flow and the way you're managing your cash flow. And you're going to also notice that, okay, you may not have any assets on your asset column, or maybe you do have assets. And you're going to be able to then manage your cash flow much better and begin to think, how are you going to grow the asset column with real assets that will produce passive income and capital gains income. And then from there, we're also going to take a look at the financial statements of any type of business that we're going to invest or acquire, because every business or investment has a financial statement, and in that financial statement tells us the real story about the business, whether it's a sound or a toxic business. And we need to make a decision based on that due diligence that we do through that financial statement, because we're going based on the facts and rather than opinions. The financial statement gives us the facts, and also when we're raising capital, right? The job number 1 of a wealthy entrepreneur is to raise capital. So when we go to the bank to get 90% of finance that we need for this building that is for selling, and we want to get it because it has tremendous potential to grow, to even capitalize more, to increase the bottom line. But right now it's also making positive cash flow. So it can pay for the mortgage that we're going to get, the 90% finance, and we're going to show the bank through the financial statement, because it's based on facts. It's based on the tax returns of that specific commercial real estate property. And so the bank needs everything that is in that financial statement to make a sound decision to lend us the money. Tax-free. Remember, debt is tax-free because money is created with debt. Today, money is debt. Actually, in the future, money is going to be crypto. That's why it's important and smart to invest into crypto. Learn about crypto first because it's an asset class, okay? But money is moving towards being crypto, but it's created with debt today. So money is a currency. There is nothing backing it but an idea with confidence. It's fiat, it's fake money, it's digital. So once you understand that President Nixon separated the gold standard from the US dollar in 1971, August 15, because we were a country, and we still are, the United States is a country that imports more than exports. So if the gold is attached to the dollar, we would have gave the entire gold supply that we have into other countries, like our enemies, perhaps, well, political enemies, China, etc. So it was critical that he did that, and actually worked out best for the people that are having financial education, and then because we can actually get wealthy for free using debt, because money is created with debt. That's when you looked at the printing amounts since 1971, even before then, you can see a skyrocket. 1971, it starts going up. 2008, the market crashes. What does the Federal Reserve Bank does? They print even more money. And so people call it, inflation, hyperinflation, and they're all worried, and maybe they are, and they should maybe be worried. But if you don't do anything about changing the way you play the game of money, then you're always gonna be worried. We have to beat the game by having the new rules of money, not save our way into success, because money is an idea backed up by confidence. If you're saving money, you're saving garbage. That's why we gotta keep money moving from asset to asset. That's the way money becomes valuable. Because if it stops moving, it goes back to its intrinsic value, which is zero. Every currency has always gone back to its intrinsic value, which is zero. So it has lost about 85% or more since President Nixon separated the gold standard from the US dollar. The US dollar has lost most of its value. So we have to use it as a tool to acquire assets that are sound, that are making positive cash flow or capital gains income. And we can tell by the financial statements of that asset. And if we are building a business from scratch, then we need to ensure that it has intrinsic value by registering the brand, protecting its niche, having something unique that no other company has, and also having financial integrity or business integrity, which means that the business is complete. It has the 8 elements of a successful cash flow triangle. We talk about it inside of our digital course, how to build cash flow with the internet, right? The cash flow triangle. We're going to learn about the cash flow circle. We're going to learn about different things that will help you ultimately understand the lingo of money and create true wealth in your life. But the most important thing that I want you to take today, like I mentioned a few minutes ago, is that there are 5 asset classes that exist today. And when we speak about diversification, we want you to understand that we're talking about the 5 different asset classes. Once we're successful in one asset class, because we're either acquire, let's say, real estate property, and it's putting positive cash flow every single month into our pockets, now we're going to grab that and move it into either a new real estate property, or we're going to, of course, apply the rule of diversifying, not in the same asset class. We want to also expand in that same asset class and acquire more real estate properties, but we also want to put money into other asset classes, because some asset classes will do better in down economies than others. So diversifying into other asset classes is critical. And I want you to be comfortable by thinking, okay, once I'm successful in this asset class, I have choices to make now. I can either acquire another real estate property, or I can start protecting myself for down economies and hedge for inflation by investing in different asset classes, and continue to do that, and also reinvest back into that one asset class, real estate, right? It's about investing among those 5 asset classes continuously. And the way we beat the game of money is by understanding that today money is created with debt. So we want to raise capital. We want to use as much debt as possible. So when we have capital, we want to raise money. We want to go over there and ask the banks for money, because they're in the business of lending money. They're looking for people like us to manage debt successfully. How do we manage debt successfully? When we bring an asset that is profitable, that has intrinsic value, that has financial integrity. The bank noticed that through the financial statement, and they're willing to give us the money to acquire that asset. And we have a team of people that will manage the asset, and they can see all of that. So they feel comfortable by acquiring that asset by lending us the money, because now they're going to hold the deed of that asset, because we have a mortgage. But that mortgage is making us wealthy. That debt is making us wealthy. Why? Because it's good debt. It's getting paid on its own through the asset that we acquire, and it's making us payments every single month of positive cash flow into our pocket. So there are 2 types of debt, good debt and bad debt. And we talk about it also on another podcast, so you can go listen to it. And I appreciate you being here. I will talk to you tomorrow. We're going to do a 30-day challenge. We're going to continue doing it the entire year. So every time you get to one of our platforms on social media, we're going to be speaking about business, money, and investing, right? So we are the authentic brand of how to become wealthy and how to bring that investor out of us to be a master investor to successfully beat the game of money. We are the brand of money, business, and investing. Make sure you hit a follow on this platform here in this podcast, and also go to our YouTube channel. Follow us over there in all other social media platforms. If you have any questions, let me know. I'm going to drop the link of the digital course that I'm recommending that you take action on. It's on our website. Go get it. You're going to thank me later, because we always add a lot of value into everything that we do to help all of us become wealthy and have total freedom. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. I appreciate you listening and investing your time into your financial education. Well done, bringing you the good and bad news of money, the business principles that work in all economies. Bye for now. Talk to you later.